Good morning to everyone. I'm Eric Rosenthal. I am the Managing Director of Rapyd, one of the sponsors of this event. Wanted to give a bit of an overview of the session and of myself, and then I will turn it over to Mick to introduce himself. So I'm Eric Rosenthal, I'm the Managing Director of Rapyd here in the Americas. Rapyd is, thank you. Rapyd is a fintech as a service platform that supports a variety of different large-scale enterprises in supporting their ability to scale globally. Rapyd maintains 4 different products: a global collection product, a global disbursement product, a global issuing product that allows companies to issue cards in multiple countries, as well as a fully white-labeled e-wallet. Happy to have Mick here today with us, who is one of our most favorite clients and probably actually our favorite advocate. And today's session is going to be talking about successful monetization strategies for marketplaces. So whether you're talking about deploying domestically or expanding cross-border, exactly understanding what decisions you need to make as a marketplace early on and how they will influence you in the future is going to be our focus today, as well as understanding decisions around pricing, strategy, licensing, payment acceptance, disbursements, and ultimately all the complexities of making money move through the system. So before we get started on the questions, Mick, if you can just introduce yourself and tell us a little bit about your role at Uber.
Yeah, absolutely. Thanks, Eric, for inviting me here. Great to be here. So my name is Mick Kurian, and I am on our business development team here at Uber. I've been at Uber for about 3 years now, and currently lead our fintech partnerships. And so that encompasses a lot of things, everything from kind of how we accept payments and disperse payments to drivers, to also some of our financial products, such as our debit card for drivers in the US and Mexico, and thinking about expansion beyond to our global 63 markets. So a lot of different fun projects, and it's been a great time working at Uber and partnering with Rapyd on some of those initiatives as well.
Awesome, thank you very much. All right, so to kick it off, I personally remember when I was at First Data many years ago that the talk of the town in 2014 was the significant innovation that Uber brought to the market, the fact that it made payments invisible, making it possible for someone to pay for their ride without actually having to take the card out. When you look back at what you were doing now, and you also look at what Uber did early day, what are some of the early lessons, or what are some of the lessons that early stage marketplaces should learn from Uber, in your opinion?
Yeah, I think there are kind of 2 areas that we have lessons from at Uber that are very applicable in payments, but also applicable more broadly. The first is kind of scale globally, but think locally. And then the second is, run fast and kind of tweak along the way. And so I think for the first one, Uber was set up obviously in a way that we had basically a GM of a market or a region, which allowed us to scale very quickly. And so those GMs were responsible for thinking about their markets and doing whatever they thought was best for that market, whether it be Mexico or Czechoslovakia or something like that. They were responsible for everything in that market, and then they were able to make decisions on their own to do things that made most sense. And so very valuable, I think, as we've grown into a bigger company, we've kind of moved away from that, but that kind of independence and autonomy for each individual region or market allowed us to scale very, very quickly in the early days. And the second point around is kind of more related to payment specifically, is around kind of the moving quickly and iterating. I think we were able to make a lot of decisions about payments by just trial and error. And so we would, onboard new payment methods very quickly, and then, tweak them for better or worse, and would, did not do a ton of analysis around which payment methods were the best or which were the worst, but really just tried it out and see what resonated well with the market and with the users, and then went from there.
Interesting, great. So when I hear you talk about payments, to a certain degree, we're already kind of geeking out around payments and speaking of payment gateways and local payment methods. The role that you currently have is probably a role that anyone inside of any company is going to have, which is you have to serve as the representative or the ambassadors of payments and explaining what they are. You live and breathe payments at Uber. When you're talking to your colleagues at Uber, who are maybe not in the payments realm, what do you find that you have to explain to them about payments, and ultimately why payments is so critical to the strategy and enablement or enabling strategy for all the other products that Uber has?
Yeah, this is a great question. And I think we as payments nerds often just get so into the details and nuances that we forget that not everyone, especially at big companies, has kind of the same working knowledge as us. And so I think at Uber, I have a fun story of, I remember a senior executive came to me and was like, my payment fees are going up, but we're doing more volume. What's going on? And they were distraught and upset about this because their understanding of payments fees was that it was like a kind of subscription. You pay $100 and it's all you can eat kind of, and not it's on even a or per ride basis, and it's a percentage, and all the nuances that go into fees. So I think first and foremost is there's absolutely education that needs to be done. I actually used to hold a payments 101 tutorial with a lot of folks at Uber to just how payments work. And it was super helpful to kind of understanding across different cross-functional teams of how payments work and the complexities of them, and how there's a processor and a network and all of the different functions that go into a fee. So that's kind of one part. The second part is, most folks think of payments as just a cost center or a toll that you pay as part of a transaction. I think there's some work to be done to kind of flip that narrative into thinking about payments as a way to improve the customer experience. I think, as you mentioned just earlier, part of the Uber magic is making those payments invisible. And that's what really was some of the early innovation at Uber to help us grow and scale and become truly differentiated. And so thinking about how payments can, change or augment the user experience is really important. There's new payment methods like Apple Pay and Venmo that also kind of enhance or improve the experience. And then finally, I would say, longer term kind of optimizations in the phase 3 of a company is looking at payments not only as a important thing to run your business, but as a potential revenue generator. And so obviously we have started to do some of those things with introducing a co-brand credit card at Uber. We have a co-brand credit card in the US with Barclays. And so as we kind of grow and get stronger in our payments understanding and foundation, we're able to introduce these new revenue generating payment line items as well.
Got it. Excellent. So when you, in that regard, think about going global, we have lots of different marketplaces in the audience. If you are a marketplace and you have aspirations to go global, particularly doing so as quickly as Uber was able to do, what role does payments play in enabling you to go global, in your opinion? And what exactly do you think you've learned, and that if you were to go back in time, you would give advice to the audience about how to go even faster or not have to deal with complexities later on?
Yeah, I mean, obviously for any business, payments is kind of a prerequisite for going global, right? You accept payments and to some degree disperse payments out in a marketplace setting. And so they're definitely requirements as you go global. I think, we moved at a very quick pace at Uber. And so we just, someone in some country had a partner that they liked, and we would initially just kind of work with them. That ended up not being obviously the most scalable way to kind of go about operating a global payments business, 63 markets. So I think as we kind of optimized and matured as a company, we definitely look for partners that can help grow with us, that have that kind of global coverage, or at least desire to grow with us and be global at some stage. And so that is kind of a key aspect of it, is finding partners that either have, one, a global scope already, or two, a desire to become global in their future. and we collectively feel that they can also grow alongside us. I think some of things that we think about are also around disbursements. I think everyone always thinks about payment acceptance, being able to accept payments with traditional processors, but we also think about disbursements as well, because we have over 5 million drivers on the Uber platform today, and we have to pay them out. One of the aspects of that I think, unlike payment acceptance, is for us on the disbursement side, we have to have 100% success rates, because we have to pay out every single driver on the platform or courier on the platform, and they need to receive those funds because that's their earnings. And so the threshold or bar for success is that much higher when you are thinking about disbursements. And so it requires a lot more due diligence and working with partners and banks to make sure that those work smoothly as you scale your business across the globe.
Got it. So thinking about going global, here at Rapyd, we talk about the fact that we as a company actually started without supporting at the beginning of our history credit cards. And a lot of our tagline early on was that less than 20% of the world actually has access to a credit card. The vast majority of people in the world don't have bank accounts, or if they do have debit cards, they're not able to use those debit cards to transact. In light of that, what did Uber do to overcome that challenge of not being able to transact with ultimately 80% of the world that didn't have a credit card?
Yeah, this is a great question because it really resonates for Uber. And so we actually, about 5 years ago, started accepting cash at Uber. And it is one of the most dominant payment methods actually on the platform today, because as you said, the vast majority of the world, especially in Latin America and the Middle East, do not have credit cards or debit cards to pay. And so we started accepting cash, which has been a very fun challenge and problem to have. I think the positive is once we introduced cash, especially in LATAM, we saw exponential growth. You could just see the graph. It was up and to the right. It was the pure hockey stick growth, and it was exciting to see. So that was the positive of introducing cash. The negative or challenge was we needed a way for that cash to eventually get back to Uber. And so we have kind of basically the driver receives cash for the trip, and then on a weekly basis, we send them an invoice for basically the Uber service fees that are owed to Uber. And so we enabled a way for drivers to basically go into local convenience stores, show their invoice, and then have the cash remitted to Uber. And so we call that internally our cash collection strategy around working with drivers for those cash trips. And it's obviously been a long road, and we've worked to optimize this over the years. But it's been relatively successful now, and allowed us to kind of sustainably and scalably grow cash as a payment method to where, I think from an overall perspective, even in light of COVID, I think cash will still always be a payment method at Uber, especially in LATAM and some of those more developing markets.
So obviously this is something that Rapyd and Uber are doing together and facilitating the ability of drivers to drop off the cash. This is actually one of the reasons that I personally decided to come to Rapyd. Having spent time at Citi many years ago, we'd actually say that it costs about 10%, so $10 cents on a dollar to collect cash for most companies. And we've actually even heard, in light of COVID right now, something that's happening is we have a number of beverage companies that have approached us, call it beer companies. And because they can't deliver the beer, it also means that they can't pick up the money that the shops owe them. And they have millions and millions of dollars that need to get collected. So when you think about cash, it has a high risk, it has a high cost. You say that it's going to stay around, but now that you're thinking of the fact that you've embraced it, what are the things that you're doing besides this building out the network to think 2 to 3 to 4 years into the future when you probably aspire for cash to be completely removed from the system entirely?
Yeah, I think, there are some challenges with cash. And so, probably, I don't know if it's 2 years or 10 years, but, eventually it will slowly decrease in terms of the wallet share on the platform. One of the ways that we're looking at doing some alternatives is local payment methods, as you said, right? And so we actually have started accepting some of the wallets in international markets. We've also developed what we call the Uber Pay API, which is a connection to allow us to more scalably connect to lots of local payment methods, because obviously it can be challenging to have so many different payment methods and manage those integrations for 63 countries. With the Uber Pay API, it allows us to connect in a more sustainable and scalable manner to lots of different partners downstream, and so that we can have the relevant wallet for Bangladesh or a smaller country without having to kind of do a ton of bespoke product integration work.
Got it. Super interesting. So when I think about that, and I also think about my attendance last year at this conference. So last year I was at the Marketplace conference, and one of the common things that I heard from people in the audience was we started with XYZ provider, and then as we went global, or we tried to do this or we tried to do that, we discovered that we couldn't do it with that respective provider, which ultimately made it really interesting for us, because that's kind of how we position yourself to be able to overcome those global challenges. If you had been at Uber, call it in the first year or first 2 years, and could go back in time and tell Travis at that time, we should be making different decisions because we're going to call it pay the price later, or we're going to have to go build teams to go overcome these challenges, what things would you have done different and why?
Yeah, good question. I mean, I think hindsight is always 2020. I think for us, it would be two things. One is never rely on one single partner. I love all our partners. They're great, but I think you always need to have redundancy and no single point of failure, because when you're thinking about the volume and scale that Uber was going towards, and I'm sure all market players aspire to, you inevitably will come up with a failure point or a timeout, and so you need to be able to have multiple backup options. And I think in the early days of Uber, we thought that we could kind of rely on a single rail or a single partner and be good. And when you're at Uber, right, you're operating 365, 24/7. Even if you have an outage at 3 a.m. on a Monday, that's still millions in dollars in bookings that are potentially lost. And so redundancy is super important and critical. And then the second part would be around disbursements. I think we talked about this a little bit earlier, but I think we did not focus enough on disbursements and the nuances of that side of the house. We focused a lot on acceptance, but disbursements are obviously always critical, and ensuring that you have 100% success, as we talked about a little bit earlier, is really important. So I would invest more heavily in those early days on having very reliable partners on the disbursement side, and also try and simplify the number of partners. I think there's still a lot of challenges today in regards to having partners that can send money out to local bank accounts in smaller countries, and so if there are partners that can provide kind of access from a one to many, that should be working well.
Excellent. So if you're saying that you need redundancy of partners, let's assume you're giving advice to people here that either have a set of partners that they're now considering expanding into new partners, or they're earlier stage and they're just beginning to find their partners. If you were telling them how to evaluate a vendor and to choose a partner, what type of things would you suggest that they'd look at?
Yeah, so there's kind of three criteria that we look at. The first is global scalability. So that obviously, especially in the terms of Uber, is very important. And I think it's more nuanced. It doesn't necessarily mean that a partner needs to be live today in 50 countries, but has the potential to scale and grow with us over time to potentially be in multiple geographies and regions. So that's number one. Number two is just kind of the overall tech strength and prowess. I think we do at Uber a fair amount of due diligence, working with our engineers. We had a lot of conversations with you guys at Rapyd about kind of the tech stack and model and what it looks like and can it handle the volume. And so doing that work upfront is very important, and I think saves you a lot downstream when you do eventually get to those volumes. And then three is just kind of the working team. Obviously, I think you need to have folks that are willing to kind of innovate with you and customize solutions for you. You inevitably are always going to need something kind of semi-unique for your business, and you want a partner that's willing to kind of work through those challenges and create custom solutions that work really well for your business. The final thing I'll mention here is that I would say, as you heard in those three criteria for decision making, the one that I did not mention was pricing, and that is kind of, I think, twofold. Is an aspect of one, I hope that pricing is always table stakes, that a partner will come to us with competitive pricing to begin with. But I think if your strategy as a payment partner to kind of marketplaces is competing exclusively on payment or on pricing, that's not necessarily the key to success. It's pricing combined with those other three things. And so oftentimes, I get pitched a lot about how, pricing is X% lower than anyone else, which we love. And pricing is very important, obviously, when it comes to payments, but is not the sole decision criteria.
Excellent. That's great to hear. So just to highlight a little bit before we move on to the last question. So go back in time as well. You and I had a chance to meet, I guess it's now almost a year and a half, 2 years ago, and not making this about Eric, but making this about Rapyd. When you looked at Rapyd, what exactly were you trying to solve for that you saw in Rapyd as a partner, that if you're perhaps thinking about the type of problems and the types of scaling issues that some of these companies aspire to have in their growth path, that you would say to them, this is what you should be looking for, and this is what we saw in someone like a Rapyd?
Yeah, I think that for us, one of the key things was the global coverage. Obviously, not to beat a dead horse, but that is super important and critical to us, especially at Uber. We're a slightly unique business in that we operate in so many markets. But I think as any marketplace is aspiring to go to multiple geographies, having a partner that can scale and grow with you to those geographies is really important. And so that was kind of the key aspect that we saw with you guys. The second is the ability to kind of innovate with us. I think as we discussed in our several initial conversations, the kind of ability to think outside the box and creatively of how to solve unique problems that Uber is having. I think a great example is kind of the cash collection that we had for our driver base, and how do they remit funds to Uber that they need to do on a frequent basis. So kind of being able to think creatively. And then third is the tech. Obviously want a partner that can handle kind of the volumes or future expected volumes of a company like Uber that when it comes to payments is handling, hundreds of millions of dollars.
Awesome. Well, thank you very much for sharing your perspective. I think what we'll do is switch over to some of the questions off to the right. I think we'll skip the question about the haircuts. That was already covered. So the first question is from Stacy here. So it says, can you give some examples of some of the companies that you use for disbursements, if you're able to share, or at least maybe give a sense of what type of companies you would want to look at?
Yeah, I think I'll speak pretty high level here. But we leverage a lot of partners. I think this goes around into my point around redundancy and having multiple partners. So we leverage both fintechs like Rapyd, as well as more traditional banks that are global in nature.
Awesome. And then I have another question here from Nir, which is, I'll just skip to the question. There are two payment approaches: the Booking.com model, where you pay directly to the business, and the Hotels.com model, where you collect the money and disperse it or distribute it. Which approach did you take and why? So actually, if you don't mind, I'll actually highlight something here. So Here, interestingly enough, both Booking and Hotel.com actually have a very similar model, which is they're aggregating the collection of funds from multiple buyers. So in both cases, they're collecting funds from people making hotel reservations or airline reservations, and then they're dispersing to the airlines. Particularly in some scenarios, if you're collecting funds and then dispersing it to another party, you actually end up acting as a money transmitter, and you end up taking funds into escrow, essentially. So at least in what we've experienced up until now, sometimes the reason you don't want to get yourselves in the funds flow as a marketplace, particularly here in the United States, is you can end up being required to have licenses to do so. So it's very common for companies to come to us because they are doing this, and only after the fact they realize that their bank tells them that they can't be doing that because they're actually breaking the law. At least that's what we commonly experience here in the US with some of our clients. Wait, did you want to add anything to that?
Yeah, no, I think that's great. I think we are, to your exact point, constantly exploring what kind of models work, and it also varies on a country by country basis. And so we are constantly tweaking this. And I don't want to say too much, given that this is always kind of something we're working on. But yeah, I think what you said resonates as well for the Uber scenarios.
Awesome. And I think you touched on this, but maybe you can give a bit more of your perspective on would Uber consider moving into digital banking? I know that you have the driver debit card. You obviously have the co-branded credit card here in the US. I think the question is probably asking, what are Uber's aspirations as it relates to providing financial services, if you can comment?
Yeah, yes, I think the short answer is yes, absolutely. We would consider moving into kind of the financial services or fintech space, and we already have. And I think you see some of our initial projects or programs with we have a driver debit card in the US that is very successful through our partner Green Dot. We also have a co-brand credit card with Barclays in the US. And so as we kind of piloted these programs in the US, we always have ambitions to kind of grow to kind of call it our top 5 or 10 global geographic markets. So you will probably, see more of these type of things from Uber in the future.
Okay, so I'm going to try to power through the other ones, and then if we get cut off by Joanna, she'll let us know. So the next question is, what have you done to minimize the cost of interchange fees? And actually, if you don't mind, I'll take this one as well, because I think that what we've seen is there's some very interesting things that you can do around optimizing of interchange fees, but specifically what we've observed from the outside is using the wallet as an in-between is another way to lower interchange fees. So for this is from Sanders. What we've observed is companies like Uber and others, what they're actually doing is saying, why don't you top up your wallet with $50, with $100, and then draw down a bounce and basically be pre-purchasing rides. One that helps eliminate the cost of interchange. It lowers fraud because you now have the funds there. In some cases, you're actually able to consequently book those earnings because you've already actually achieved that revenue. And then I think there's a lot of other creative things that you can do if you're specifically talking about credit cards that maybe Mick, you can comment on for Sanders.
Yeah, I think we look at always ways to reduce those costs. There's multiple avenues we take, many of which I can't comment on, but I think that what we have, as you, Eric, were talking about, is the stored value, or Uber Cash, as we call it at Uber. We've scaled that out almost globally now, and has been relatively successful. And I used to work at Starbucks and worked on their stored value model, and it was obviously very successful for them. And so we're trying to take some of those learnings as well and apply them to Uber.
Awesome. Okay, so I haven't got kicked out, so I'm going to try to get to the last two questions in fairness. So what was your decision? Oops. We'll see if people are still here, but what was your decision-making process when it comes to cancellation fees?
I actually I'm not too familiar with all the decision-making process. It kind of came outside of the realm of payments. So I don't have anything great to share there.
Okay, and then if you could choose one, Stripe, Braintree, or Rapyd, maybe the question here that you can answer is when you can look at different partners, maybe you can answer that in more generic terms of how do you think about different partners or what you would maybe look for for partners today?
Yeah, I think the short answer is hopefully you never have to be in a situation where you choose one. As we've talked about a lot, having redundancy is super critical in payments, especially at a global scale. And so having at least two is great. I think that the things that we look for, we covered are, global scalability, willingness to kind of innovate and make custom solutions for Uber, and then the tech backend.
Awesome. Well, Mick, thank you very much for joining us on the session today. It was actually pretty fun. Those of you that need advice about getting a haircut, you can also send me a LinkedIn invite. We provide payment advice and haircut advice.
Payments and haircuts. I like it.
So thank you again for joining us. Rapyd has a virtual booth that you can stop by if you want to. Well, that's where we'll be heading probably for another hour or so. And Mick, stay safe. Thank you again.
Thanks, Eric.
Thank you. Bye-bye.